The US dollar is collapsing and no one is talking about it. In the first 6 months of 2025, the dollar has lost 10% of its value.
First half of this year marks the dollar's worst performance since the 1970s. The U.S. currently has weakened more than 10% over the past 6 months.
Economists say the U.S. currency has weakened more than 10% over the past 6 months.
The worst first half performance since Nixon took the dollar off the gold standard in 1973.
That's a low not seen in decades, since 1973.
You think it's just the chart? It's not. It's the cost of your groceries. It's the cost of your vacation getting canceled. It's the rest of the world quietly pulling the plug on America's financial dominance. Meanwhile, Wall Street is rallying. The headlines read soft landing, but consumers, they're falling apart. This isn't just about the dollar. This is about the collapse of consumer confidence in America.
This is the fifth consecutive month of consumer confidence declines, dropping 8 points, and it's the lowest level in 5 years.
And this problem, it's just getting started. So what exactly is happening to the US dollar? The dollar index, which tracks the dollar against other major currencies, has dropped more than 10% so far this year.
In the first 6 months of 2025, the US dollar index, which tracks the dollar against a group of 6 major global currencies like the euro, yen, pound, has tanked by nearly 11%.
That's not a small move. That's something that usually takes years, and it's happening in a matter of months. And historically, this is the worst start since 1973. Back when Nixon shut down the gold window and the dollar was cut loose from reality. This time, the collapse is being driven by 3 major forces. One is tariffs. They've reunited trade tensions with Canada, Mexico, and China.
President Trump said he's placing import tariffs on production from those countries. Mexican and Canadian imports will face 25% tariffs, and goods from China will face a 10% tariff.
Investors hate uncertainty, and they're moving out of U.S. assets fast. 2, the Fed. Powell is under political pressure and is boxed in by inflation. Markets are betting on major rate cuts this year, which only adds in more weight, pushing down the dollar. 3, massive new spending. Congress is currently debating a $3 trillion big beautiful bill.
The one big beautiful bill to secure our borders, turbocharge our economy, and bring back the American dream.
It sounds great until you realize that this could only push up the deficit further. This could also raise flags for overseas lenders. And this also does not take into consideration the roughly $150 trillion in unfunded liabilities that the American people have. We are presently adding roughly $1 trillion in debt every 100 days.
America's debt is growing $1 trillion every 100 days. Economists warn if Congress doesn't take action, it's only going to get worse.
And as that is unfolding, the dollar is technically flashing a death cross on the charts. This is a classic warning sign. When short-term momentum breaks long-term trend, it usually means the damage isn't over, it's just beginning. This isn't just a correction. This is a global confidence crisis in America, and the global markets are responding accordingly. When the dollar melts down on Wall Street, things get worse for the people on Main Street. And these very people are being broken by inflation and the rising cost of living, coupled by high interest rates. The economy shrank 0.5% the first half of 2025.
The Commerce Department's third and final report shows that GDP fell at an annual rate of 0.5% from January through March, worse than the 2 prior calculations.
And the biggest reason? You, or more specifically, your spending. Consumers from coast to coast, they are watching every penny, and their spending is drying up. Retail sales fell again in May, and when the average American stops spending, businesses start to bleed. You need to get a new car today? Good luck. The average new car now costs $49,000. Loan payments at today's interest rates with great credit, it's about $747 a month, not including insurance, maintenance, and gas. And that's showing in direct auto sales as their inventory is piling up and sales are collapsing. They're down over 15% in just the first 2 months of this year. And people aren't just buying less, they're buying differently. Buy now, pay later usage is up 40% so far this year. Credit card debt is at record highs, and over $10 billion in loans are over 90 days past due. And here's the craziest part. Unemployment is still showing to be very low. But consumer confidence is falling off a cliff. But deep down, people know what the headlines won't say. That something is breaking, something is not right. It's in the gas bill, it's in the grocery aisle, it's in the sick feeling that millions of Americans have when they swipe their credit card hoping it will go through. This isn't just a slowdown. This is what it looks like when the foundation of the economy begins to crack. The dollar has dipped before. In 2008, in 2020, and 2022, each time it bounced back. So why would this time be any different? This time, investors aren't just waiting it out, they're leaving. Hedge funds, sovereign wealth funds, international banks, they are all cutting exposure together in real time on the dollar. Because it's not just about the currency anymore, it's about the trust. Countries around the world are accelerating de-dollarization. They are trading oil without the dollar. They are shifting reserves into gold, the euro, and even the yuan. And this isn't fringe anymore. It's the main conversation at the G20 and at the BRICS summit. And at the same time, the Federal Reserve, the one institution that's meant to keep everything stable, is now being pulled into politics. Trump is putting pressure on Jerome Powell.
President Trump is ramping up his pressure campaign on Federal Reserve Chair Jerome Powell, urging him to cut interest rates by a lot.
Low IQ for what he does. A stupid person, frankly, at the Fed.
You know, you have a guy in there that with the stroke of a pen could lower interest rates and save us hundreds of billions of dollars a year. But he's a stupid person.
There's talks of firing him, replacing him.
I'd love him to resign if he wanted to. He's done a lousy job.
President Trump could be getting closer to naming the successor who will replace Jerome Powell as Federal Reserve Chair.
Investors are watching this and asking, can we still trust the Fed? And then there's the debt. The U.S. just blew past $36 trillion with no plans to stop.
The national debt stands currently at about $36.2 trillion, and every day, the U.S. spends about $2.6 billion paying the interest on that debt.
Moody's and Fitch are warning of further downgrades.
Moody's has lowered the United States credit rating because of an increase of government debt.
Some funds are even buying credit default swaps. This is an insurance policy in case America defaults. This isn't just a currency slide, it's a shift in perception from a safe haven currency to a riskier bet. And once that global narrative changes, history says it's very rare for it to turn back. So what happens if this trend does not stop? If the dollar keeps falling and confidence continues to slide, and the world as a whole begins to move away from America's financial dominance? We're not just talking about headlines anymore. We're talking about real life effects on you. First, import prices begin to jump. Everything from electronics to food gets more expensive. Even if you don't travel, you'll feel it in your cart and in your bills. Thinking of going abroad? Good luck. A weak dollar means that your purchasing power doesn't go as far. That European vacation now doubles in price. Fuel costs rise also because oil prices are still priced in dollars. And when the dollar weakens, oil prices get more expensive. But here's the deeper problem. The dollar isn't just a currency, it's a privilege. For decades, the world has needed the dollar to trade, to store value, and to do business. That demand has let America run massive deficits with no worry of collapse. But if that demand fades, the US may have to borrow at higher rates. That means more debt, higher inflation, and less flexibility when the following crisis hits. This is how global empires fade. Not through war, not overnight, but through the slow erosion of trust and capital flight. The dollar is not dead, I want to be clear, but the world as a whole is starting to ask dangerous questions. What if it isn't untouchable anymore? That question alone changes everything, because when confidence cracks, it spreads through currencies, through markets, through people, and while politicians argue, Wall Street celebrates. It's regular people who feel it, in higher prices and shrinking paychecks, in that slow, quiet anxiety that maybe things are not as stable as they used to be. Maybe this is a correction, or maybe this is the start of a new chapter. A world where the dollar does not dominate anymore, where America has to fight to stay on top, not just militarily or technologically, but economically. Now, what I believe is very likely going to happen is the cost of living will gradually get more and more and more expensive. Just like what we've experienced the last 2-3 years.
Food prices continue to outpace inflation, increasing by 28% since 2019.
Remember when Janet Yellen came out and said, inflation is transitory. And Jerome Powell, a lot of people are saying, yes, things are gonna go back to normal, but that isn't gonna happen. Back then I said it wasn't gonna happen. I think what we're gonna see is inflation get worse and worse and worse.
If you've been to the grocery store lately, you've probably noticed some items like milk, baked goods, and beef have gone up in price since the pandemic.
86% of consumers reported feeling frustrated with rising grocery prices.
I don't believe interest rates on consumer loans or mortgages will be going down anytime soon. Maybe a small eighth of a basis point, an irrelevant amount. But for the most part, I think rates are going to stay close to where they are, if not possibly go up in the short term. And I think we're going to start to see investors piling in to assets to protect their purchasing power. Because as inflation gets worse, people want to have their money outside of paper fiat into something that is going to hold value, which I believe is going to be real estate, certain types of real estate. I believe there's a lot of opportunity for a lot of people. But if you look at the writing on the wall says the bottom 95% are going to be living a much harder life the next couple of years, and the top 5% are going to get a lot richer. Because money is never lost. It's simply trading hands, right? Wealth never disappears, it just trades. And I think it's going to trade to the people that are prepared. They have access to credit, they have cash, they know what they're doing. These people are going to benefit. And if you're not one of those people now, you have access to the internet, you can learn. You can build a team. You can do anything you want if you really apply yourself and focus. Those that do will live a much better life, and those that ignore the reality, I think are going to be cutting down on a lot of expenses, and their living standards are going to shrink. It's a sad reality, but what do you think? Where do you see all this going? Do you think we're going to see the cost of living continue to get more and more and more expensive? I do. I think we're going to see tens of millions of retirees relocating or downsizing in their houses. I think we're going to see a lot of people moving overseas. I believe we're just going to see kind of like a situation like what we saw in 2020 and 2021, where everyone was moving out of LA, San Fran, New York City, and they were going to Florida and Austin and Nashville. I think we're going to see the same type of migration patterns, except not to those specific locations, but to affordable pockets in America. I think that's what we're going to start seeing in the next couple of years. But let's have a conversation below, and catch you next video.